thanks for watching my market report. My name is Mike. I'm a loan officer with a national lender, so a little bit of background about myself. So if you guys got questions about mortgage rates, this report, if you guys got program questions about mortgage programs or real estate and want to look into maybe refinancing or looking to buy, please feel free to reach out anytime. We'd love to be able to help you out. This report is basically about mortgage rates, what affects them, so what drives them on a daily basis, how are they affected, and where the trend's going. And so let's start this report without further ado by looking at first the economic report being reported today. The only one reported today is new home sales for the month of February. So January's number was actually revised higher. As you can see here, initially came out 923,000 seasonally adjusted units. It was revised to 948,000. Now, forecast was supposed to dip down to 875,000, and it dipped down much more, down to 775,000 and seasonally adjusted units here. Now, a lot of this, of course, we've been seeing with the rising rates. We see home builders with the confidence levels been coming down slightly a little bit, but also we're hearing that materials have gone up, like lumber's gone up about 200%. So they've been a little bit more resistant about creating more homes in there. So, and then also looking at the affordability is also kind of shrinking. So they're probably a little bit hesitant in building at this time as well. So this is something we'll keep our eye on because there is a very large demand for homes, and right now inventory level is very low. On a national level, we're on average it's usually about 6 month inventory. Right now we're down about 2 months right now. Let's jump ahead, take a look at the headline news. Stocks are a little mixed today. Stocks are going a little crazy up ahead this Powell and Yellen testimony for our House committee. This is supposed to start at noon. We're just about there, about them to start their testimony as I'm doing this report. But stocks been, all three indexes have been kind of dipping its toes in both positive and negative territory. So as I looked report on it, you know, Dow might be in positive, and next thing you know, it's in negative, and then same thing with some of the other indexes there. So at this point, it's mixed. It may get its cue after this testimony, and then go from there. So later today, you might see something maybe more definitive move by the stock market. But however, they're not really expected to have anything new. They kind of know what they statements have been made out before. They feel that there's a comfort level, but there is a chance that perhaps a House member may pose a question that comes from a different angle that throw things off, and that could potentially move the markets, depending on what that person says. But for the most part, we all know that Powell would like to keep the rates unchanged for the most part while we get to full employment. They're hoping to do that by next year as we kind of get out of the whole pandemic lockdowns and the vaccines coming out. The U.S. is doing relatively decent in terms of the vaccines. However, our counterpart in Europe, we're seeing more lockdowns. It's not getting the vaccines out as rapidly. They're having some spikes over there, so they're not as fortunate as the U.S. in this regards. Uh, so, and also to touch on, Biden's also talking about potentially creating an infrastructure, maybe spending more money for infrastructure, and that's something we'll have to kind of watch because that means again more spending that could affect the mortgage-backed securities and yields. With that $1.9 trillion stimulus package, we saw a big spike in that. Now, if he comes out with another package, even though it's for infrastructure, that too could boost yields even much higher than we would like it to. Um, so we'll have to kind of wait and see how that translates. There are a few other Fed members speaking today. Kaplan already spoke. He's the Dallas Fed. He's already indicated that he kind of foresees that the first rate hike could be as soon as next year, where the dot plot basically was showing more in line of 2023. So we'll keep an eye on that because again, he kind of was looking at inflation more as a transitory, but he says if he sees something that's persisting, then of course that's what he's going to be looking at, maybe raising hikes. But if it just looks like something that could be very temporary, then they may not be so quick to pull the trigger in terms of a rate hike. Let's look at, speaking of such, let's look at the mortgage rate, see what we're doing today. We're up about 17 basis points. We had a nice little lift yesterday, which helped us out. And we ended up closing about 27 basis points. So we had some price improvements in the day yesterday. Today we're up another 17 basis points from that close, and that also translates to a little better pricing today, which should help those who are looking to refinance or purchase. So the rates should be a little bit better today as a result. Let's take a look at the 10-year Treasury. 10-year Treasury is coming down a little bit. It's pulling back down to 165. A key number will be this here. It was pretty tough. As we broke above it, we'll have to see if this is a strong support here. If it doesn't really hold, and we could break down below it and maintain that, that could help us out in terms of mortgage rates. We may see maybe a bit of a correction. This would be a kind of important note to see if we get a correction or not, and that's around the 1.63 level here. So keep your eyes on that. Now things could change. We do got some Fed speakers out there, and again, it's testimony. If we get another angle in there, that could change pricing on mortgage rates. Maybe it shifts a different direction. They talk about Biden stimulus or another round of spending for infrastructure, depending on the size. That's more spending. That could also, again, see a spike in yields and also mortgage rates. So those are some items out there to keep a watch for. You guys have a great rest of your day. Thanks so much for watching. I'll see you in tomorrow's video. Bye-bye.